Good evening, everybody. How are y'all doing tonight? Ready to learn. All right, Megan. Happy to hear that. That is the goal, always. We're going to get started here in just a couple of minutes. Just going to give everybody else the chance to hop on in before we get going. How's everybody's week been so far? Good, bad, great, good, and green. All right, iPhone. That's the way to do it. It's been really busy, dude. Yeah, it's been busy, but hopefully going to find some a little bit of free time later in the week. Busy's good though, I guess. All right, going to send out one more message letting everybody know we're getting started, and then we'll get right into it. Don't want to keep everybody waiting too long here. Can't type. Yes, iPhone. I do have a job outside of the market, but it's getting too distracting. Getting too distracting. What's going on, Ando? Guy had to make an appearance. The story was that a lot of people were interested in hearing about the ETF, so we'll see if a couple more people stop by. But if not, we will roll without him. We were trying to do this one for the people, but if people don't show up, you guys are here, and that's all that matters. All right, it's a couple minutes after the hour, so I don't want to keep you all waiting. Let's get right into it. Welcome everybody to the class for the night. I see a couple of new names in here, and I haven't really given myself an introduction in a couple classes, so I figured I'll let y'all know who you're listening to and joining this evening. For those of you who don't know me, I go by the name of Tostie here on the Discord. Been here with Only Options probably I think since January of 21, working here. Joined back in June 2022 or June 2020. So spent a lot of time here. Seen a lot of members come and go and grow throughout their time here. So I like to think I have a good amount of experience with you all. And yeah, I've been giving lectures for over 3 years, going on 3.5 years. So definitely always going to get some good quality when you're in my classes, and the rest of our classes here as well are all great. So happy to have you guys all here tonight. With all of my lectures, generally speaking, I like to try my best to pack a large amount of information in them in as short of an amount of time as possible. And that's a conundrum that you'll see me do my best to accomplish as we go throughout the rest of these slides through the evening. But yeah, that's going to be the big idea for the evening. We've gotten a lot of requests for a class on ETFs recently. So figured we kind of break it down a little bit, talk about a couple different ETFs, what they are, why they matter, how to understand them, and hopefully give you guys a bit more background on the market in general. So welcome in. Lavins, yeah, definitely given that beginner's course, that is me. So happy to have you in here. Why is Daniel got his hand up? All right. Yeah, so that was really the big idea, the things that I wanted to get into before we get started. Just as a kind of a awareness, this is the kind of breakdown of the beginner's course series that I've given here, I believe twice now. A lot of really good information in this course series. So if you haven't checked it out already, highly recommend you do so. This one we've already kind of covered in the beginner's course series a couple of weeks back, but wanted to kind of try and give a different spin on it because, yeah, apparently a lot of you are really interested in the ETFs. So we're going with that tonight. All right. So starting this one out, first and foremost, we want to introduce the idea of what an ETF is. And the big idea behind what an ETF is, or exchange traded fund, is it's a security listed on the stock market that can track an index, sector, or other asset. You'll notice a lot of the definitions that I give in these lectures tend to be reasonably vague. And the reason behind that is a lot of these terms in financial markets can really be all encompassing. So we have to be very appropriate with the types of definitions that we provide and how specific we are when we're talking about things. And an exchange traded fund can be a very, I'll call it, diversely representative security that could represent a whole host of different sorts of things. So again, some high level examples are an index, sector, or other asset. So some things that an ETF might look like is, for example, an ETF that represents the S&P 500. I'm sure every one of you have heard of the S&P 500, even if you don't trade, something that comes up on the news real often, especially through COVID. It was rather important to people. And an ETF that some of you have probably traded that reflects the price action in the S&P 500 is the SPY. And similarly, there's also plenty of different sector ETFs, which we'll talk about later in the lecture. So there's ETFs that essentially represent a collection of stocks in a sector, for example. And finally, I just kind of grouped everything else in other asset, which could look like maybe the commodity market, maybe silver, copper, gold. It could look like maybe something like uranium. There's also an ETF for, let's think, solar, the dollar, the US dollar, US 10-year treasuries. So whole host of different ETFs. The big idea that we need to know is that exchange traded funds, or ETFs, give us a mechanism to trade things that typically we wouldn't be able to trade in financial markets. So the ETFs are essentially a vehicle to trade another asset that isn't typically tradable. And yeah, I'll show, yeah, for crypto now. Yeah, so there's 8 ETFs now for crypto. So yeah, great point there, Raphael. I almost forgot about that. Yeah, so you have ETFs for Bitcoin, Ethereum. ETFs are in the process of kind of working their way through the regulatory system. So whole lot of different ETFs. We're going to cover a lot of the most important ones here tonight. And then later throughout the lecture, we'll talk a little bit about some analysis on them and a couple different tips for kind of a weekly routine in terms of analysis and how to really use these ETFs to level up the types of trades that you end up finding. So let's keep this going. Again, another kind of graphic representing ETFs if the last slide didn't drive it home enough. Again, ETFs can represent stocks, bonds, commodities such as gold or oil, foreign currencies. And again, now we have crypto. Yeah, so this is just another way to present the information that we just talked about. So the most important market indices and their corresponding ETFs are likely all things that you've heard of. And I could just ramble off these ETFs, or excuse me, these indexes, and I'm sure everybody's heard of them. Again, as I mentioned, the S&P 500, the NASDAQ 100, the Dow Jones or the Dow 30, the Russell 2000, and one that might be a little bit lesser known is the VIX, the VIX Volatility Index. And every single one of these indexes has their corresponding tradable ETF. So for example, the SPX itself, you can't buy and sell shares of that. And the SPX is a bit interesting because you actually can trade options on that, which makes it a bit confusing. So for example, if I go into the options chain for SPX, you can buy and sell options on SPX. However, you can't buy and sell shares of it, which, yeah, definitely makes things a bit weirder. However, if we compare SPX to the SPY, which I'll pull up right here, you can see that these two assets should look incredibly similar and maybe even exactly identical. And I'll just make this completely clear so we can see it with no other studies or drawings on here. And looking at these two charts together, you can see that they pretty much look the exact same. And even zooming in here on recent price action, these daily bars look very, very similar. The price action is incredibly similar. And the reasoning behind that is this ETF, SPY, is meant to reflect the exact price action in SPX. Just as a quick reminder, SPX, or the S&P 500, is a collection of 500, maybe sometimes it goes up to 502 different stocks. So SPX, the index on the left here, represents a collection of 500 different equities, all moving in different directions at different times. Well, that's not necessarily true, but anyway, the price action that makes up the index is all made up of all of the stocks within it. So for example, if Apple has a really big green day, it's typically common to see some of that action reflected in the SPX, as Apple has probably close to about a 3, 4, 5% weighting in the SPX. And if we wanted to, we could even look that weighting up really quick and figure out what's actually in the SPX. So let's just figure that out really quick. SPX weighting. And you can see at the top here is Microsoft with 7%, NVIDIA with 6.3%, Apple, and a bunch more names below. So one really common misconception that we see all the time, and if you don't learn anything from this lecture and only remember this, I'm happy. One very common misconception is people say the index moves the individual stocks, which actually is completely untrue. All these individual stocks make up the moves that are reflected in the index. So hopefully that makes sense. So for example, the index can't go up if the index can't move higher if individual stocks within it don't move higher. So for example, if Microsoft's share price doubled in a day, right, which is probably never going to happen at this point, we would see that significantly reflected in the SPX. So really important to realize that the individual equities move the index, not the other way around. One kind of really interesting philosophy that I like to look at is looking for stocks that break out before the index. Generally, what that means is those types of stocks are leading the market higher. So for example, one obviously would be NVIDIA breaking out before the rest of the tech sector. So yeah, just an example there. And maybe an example of a lagger, at least over the last few months, is Apple, right? As the market sets new all-time highs, Apple is still about 5% below the prior highs, definitely showing strength as of recently. However, if you zoom out a bit, Apple's still just kind of in a range between 165 and 200. But anyway, that's a little bit besides the point. So that's the big idea of the indexes. And again, the ETFs are essentially exact replicas of the indexes. So for whatever reason, the people who created indexes decided that they're not going to be tradable. They're just going to be something that essentially tracks a group of stocks. So people created these ETFs in order to trade these indexes themselves. So the SPY ETF has been around for probably 30 years now. I'm sure there's been ETFs that have reflected the SPY before the S&P came up or the SPY came out. There's multiple different ETFs that reflect what's going on in the S&P. For example, maybe VOO, I believe. Yeah, I think VOO is the S&P for Vanguard. There's also RSP, which is an equal weighted ETF for the S&P 500. So this is just two examples, but plenty of different ETFs reflecting the same index. There's not just one option and different advantages to either. This is an interesting question from Raphael. Is there any lag between SPY and SPX? It feels like their correlation has a slight delay sometimes, or it's a time you take to flip the charts. Yeah, so with anything in the market, there's always inefficiencies, right? So I'm 100% certain that there's going to be times where SPX and SPY don't perfectly line up. Part of the reasoning behind that is because SPY moves overnight, while technically SPX doesn't. Now, some might argue that ES, which is the futures of the SPX, does move overnight and it's perfectly reflected, blah, 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 blah. But technically speaking, if we look at SPX and we check out the 5-minute, there is no overnight movement reflected here. But if we look at the SPY and open up the 5-minute, there's a bit of a difference, right? So the opening might look a little bit different as there's some extra kind of changes that are going on to account for what has happened overnight. So for example, if you look at the SPX here, comparing today's opening bar on the SPX versus the SPY is much different, right? The SPY opened the day with a bar with a 0.1% spread, where the SPX opened with a bar with a 0.3% spread. So about 3 times the size of the first opening candle compared to the S&P. So anyway, there's always going to be some inefficiencies, some weird things that happen between the two. But for the most part, they're pretty close to each other, right? The open and close, there's always going to be some funky stuff. But in terms of what's going on throughout the day, I mean, they're really, really close. Like, I mean, we could even compare this section right here. There's a small difference that I can see visually. If we just look at this little double bottom right here, not quite a double bottom, but if we mark out this low here compared to this one, right, you'll notice here, the body came down and touched that prior low, where here these two bodies didn't touch that prior low, just the wick did. So there's really, really small inefficiencies between these two. They're not always going to be perfect. Like here you can see on SPX, we came right back down to this 52.70 to the tick. Here we undercut it a little bit on the SPY. So it's not exactly perfect, but it's real damn close. So anyway, another good question. Which ETFs would you suggest for long-term investment having a good dividend as well, except VTI, VOO, and VYM? So there's a couple pretty good ones. I don't remember if I have all the tickers off the top of my head. I think FXAIX is one of them. If I remember. So this is a Fidelity one that pays a pretty good dividend, and I believe it's based on the S&P. One thing to note is that as the dividend changes, or as the dividend is paid out, you'll sometimes see that change reflected in the price action. So it might not closely follow the correlation between the S&P and the dividend paying asset might slightly change. So for example, this one is up 28% from lows to highs here, whereas this one is up also 28% perfectly. Okay, so maybe this one doesn't pay a dividend. I don't remember off the top of my head. If you send me a DM though, I can get back to you with a list. I personally don't own too many of the dividend paying names. I'm mostly focused on, I really keep it simple for the most part with the SPY and the Qs, and that does most of what I'm looking for personally. And this is an interesting question. Is it a good idea to switch ETF based on market trend, like switching XLE, XLV, XLI, XLF? So you're getting ahead of us a little bit here. Certainly you have a bit of background knowledge as you're coming into this class, so I appreciate you mentioning that. The short answer is yes. The longer answer is it depends. But the short answer is yes. It's absolutely important to be monitoring what's going on in those different sectors, because sometimes you can identify relative strength in those sectors before the rest of the market exhibits it. So for example, one line of thinking might be to look at XLF, and if it's showing relative strength over the S&P, because XLF financials are a component of the S&P, it might be a good idea to start focusing on financials a bit more heavily. And one way to maybe analyze that would be comparing XLF to the SPY. So let's go ahead and do that really quick. So we're going to pull up SPY, go into this black thing here, and then just clean this up a bit. So one thing to potentially pay attention to, and that I typically like to look at, is what broke out first. So here I'd be looking at this swing high formed around late July, which I also have marked out here. This guy broke out on 12/8, so December 8th, right? It broke the swing high on this bar here, where XLF broke out before the end of November. And since this breakout, let's see what XLF has returned. I'll just go lows to highs here. So XLF has returned about 18.5% since that breakout. The S&P returned, let's see, about 16%. So marginal difference, right? An 18% difference. However, certainly was a stronger move in XLF. So this is kind of one line of thinking to be paying attention to when you're looking into different sectors. And I know not everybody knows what we're talking about yet. We'll get here, but wanted to answer the question in the detail it deserves. But I guess another thing really to be paying attention to is monitoring if some of the sectors are breaking out before the rest of the market. So again, in this case, XLF, which represents the financial sector, generally banks, broke out almost 10 days before the rest of the market did, which that's a great example of relative strength. And then once you identify that these financials have relative strength, you could look within the financial sectors at different banks. So you could look at maybe Citi, JPM, Goldman, Bank of America, Wells, et cetera, and see if any of those are showing relative strength over the sector, which generally speaking, those are going to perform a little bit better than the rest of the sector. So again, just some kind of tips there. We'll get into that a little bit more specifically as we go down the line, but that's kind of the big idea. Let me know if that answers your question in enough detail. All right. Welcome in, Norman. Big Tatty here. Nice. Good to see you. So again, right, each one of these kind of major market indices have a corresponding tradable ETF. The one that's probably least familiar to some of you is the VIX, the Volatility Index. I'll keep it short on this one for now. Essentially, the VIX represents, it's a calculation based on the 30-day expiration XPX contract. So it kind of does some calculation based on calls versus puts on the SPX 30-day expiration, and it kind of predicts forward volatility based on that. Big thing that you need to know is, generally speaking, when the VIX moves higher, the market's implied or the market's expected volatility moves higher. It doesn't necessarily mean the market will move lower. They're not a direct correlation, but anyway, figured I'd mention that really quick. All right, so again, pulling up the same comparison that we just talked about, SPX index versus the SPY ETF, very, very similar. Again, if you look close enough, you can see some real minor differences, but for the most part, they are effectively exact duplicates of each other. So yeah, great instrument to trade. I mean, one bar that I can see that's different is this one here. Like this one is much larger than this bar here, and this has a much larger wick. So anyway, there's differences here and there. A lot of those differences occur to just kind of that bouncing that occurs right off the open. So anyway. Cool. All right, moving on. Another example here. This is the Russell 2000 index here on the left versus the IWM, which is again the ETF that represents the Russell. And again, you can see here, very similar price action. Here you can see this big gap that occurred. Here there is no gap because sometimes things get funky without those overnight moves. So just wanted to introduce that. All right, before I move on, how is everybody feeling about these topics so far? Is the kind of basics of ETFs making sense? The comparison of ETFs versus indices making sense? Any questions on those before we keep rolling? So far, so good from Johnny. All right, happy to hear it. Johnny, I haven't seen you in a lecture before. Is this one of your first classes, or have you just been quiet in the past? This isn't a call out. I'm just curious. There's no wrong answer with me. Yes, awesome. Hope you're enjoying so far. Happy to have you. Happy to hear it, Rudy. Good seeing you. I saw Husky in here too. I know Husky's always in here. All right, cool. Let's keep this going. If you guys have any comments, questions, feel free to stop me, throw them in the chat, and I'll do my best to get to them. All right. So this right here, I know a lot of text on the screen, is a list of the 11, I believe 11 is on here, most significant market sectors. And there's definitely some subsectors within these that I just kind of refrain from getting into for the purposes of this class. However, these sectors generally encapsulate some of the most, I'll call it, important or major market sectors that we have. And I'll think about some tickers that kind of fit in some of these sectors just so you guys are aware. So technology stocks, I think a lot of us could think of some of these. I think generally speaking, we got our semi group here, NVIDIA, AMD. You also have some other software manufacturers. Microsoft can fit in here. Meta can kind of fit in here in some aspects. Google can also kind of fit in here, but some of those fit in different categories. Financials, I think everybody's familiar with those big banks, JP Morgan, Goldman, also credit card servicers, so Visa, MasterCard. Moving on, we have our communications companies, which Google can kind of fit into this. Meta can kind of fit in here. You also have your Verizon, AT&T, your Netflix can fit in here as well. But you'll see some of the names that I rattle off kind of fit into two different groups. But anyway, next up is your healthcare companies. So it could be your Johnson & Johnson, maybe your Dexcom, that sort of names, maybe your smaller biotech firms. Consumer cyclical, again, this is another one that Amazon can kind of fit into here. Tesla can fit into in some ways. Even McDonald's can kind of fit into these store or this sector. Some retail stores like your Macy's. I think JCPenney also is publicly traded. I can't remember. Energy, pretty simple. Oil and gas, right? Also, sometimes you have your solar names included in here. I think everybody could probably imagine what I'm talking about with oil and gas, your Exxon Mobil, your Chevron, etc. Then we have your industrial names. So this could look like Boeing. It could also look like some smaller railroad companies, which I don't really know off the top of my head, but they exist. Then next sector is consumer discretionary. So this could look like Coke. This could look like Dollar Tree, Altria, which owns Marlboro and Juul. So those kind of tobacco names. Next up is real estate, which this encapsulates a lot of different things within real estate. So your real estate investment trusts, development companies, so like home builders and real estate management companies. Not too relevant in terms of rattling off names here. Some of your public utilities are also traded. So your power company might be publicly traded. I think whatever company in Northern California, I think that, or in Oregon that started those fires was publicly traded. I don't remember which one that is. Some other public water utilities are traded, big ones. Well, yeah, technically, I guess they're not really public. Well, depends on how you look at it. Anyway, your utility companies are included in kind of the sector list. And finally, you have your kind of basic materials companies. So it could include steel, which is maybe the U.S. Steel, Freeport McMoran, your chemical companies, so DuPont, your paint companies, which I can't think of any publicly traded off the top of my head. But anyway, that's a big list of the market sectors and some names that fit into those categories. Reason that's important and important to understand this is because market sectors generally move in groups. And as you may have heard before, a rising tide lifts all boats. So, for example, if a sector as a whole is doing well over other sectors, it's probably generally a better idea to look for short-term trading opportunities in those sectors exhibiting relative strength, right? Generally speaking, relative strength leads to greater returns in the future. Again, it's just pretty common, right? Those names with relative strength generally continue to perform in that way. There's a reason that funds are looking to get into those names so aggressively, and that's why they have that relative strength, because all relative strength really is people buying one name quicker than others. That's really it. So it's important to really be looking through those relative strength names. And this is just kind of a systematic way of doing this. Now, again, as I mentioned, all of these kind of larger sectors have different subsectors. So, for example, within technology, there's a whole kind of sector around semiconductors. And also there's a really big emerging sector around AI, right? So all names related to AI. So those making the servers like Dell, or those making the cooling solutions like SMCI, those making the, I believe, memory solutions, which is like Micron and VRT. So again, right, there's these high level sectors, but within them, there's even smaller, minute sectors, right, that also can be showing relative strength. So there's a lot of ways to look at it. And I know Norvin loves some of those semiconductor names. So if you want to find a semiconductor name you never heard of that might be a pump and dump, definitely go ask Norvin to rattle off the names that he's looking at, which looks like he already did that for us in chat. So perfect. Yeah, sure, that's some random semiconductor names. So anyway, that's a big list of market sectors. We'll continue to talk about how this is useful. One kind of nice way to visualize this, which I forgot to update this command from the last time I gave this lecture. This doesn't actually work anymore. But at a high level, there's some different kind of dashboards that you could view online that show how sectors are doing as a whole, and also can give you examples of different names to start looking into. It's important to realize that there's a lot more than Apple, Nvidia, and AMD in the stock market. While it can be very advantaged to get really good at trading a couple different stocks, if that's not really the way that you want to focus on trading, it's important to realize that there's probably 20, 30,000 stocks publicly traded on the NYSE and NASDAQ combined. So don't forget about them. Remember that they exist. And this is a good way to kind of visualize how all these sectors are doing as a whole. So for example, you can see kind of the technology sector all kind of broken down, our communication services all broken down, our cyclicals, and yada, yada, yada. So important to kind of understand what's going on in the market as a whole, as this definitely can have an impact on other trades as well. So this is just kind of one example of that. So, of course, as per the topic of this lecture, there's going to be an ETF that tracks every single one of these sectors. Why would there not be, right? So if you want to take a screenshot of this, this is essentially a list of the ETFs that track those 11 sectors that I rattled off just a little bit ago. And every single one of these ETFs is tradable, optionable. I don't usually trade options on these ones, but you could if you want to. And yeah, definitely a great point to be looking into these for kind of what I usually like to do is if I can look at these weekly, I would. Generally speaking, though, you want to be monitoring where the sectors are at least monthly and have your levels updated and set some alerts because as a sector as a whole comes into a strong support, you're going to want to be looking for the names picking up the highest bid or the highest volume as the overall sector comes into that support, and look for that relative strength in that specific name in order to hopefully get a nice buy point there. And same thing goes if you're looking to go short as well, just kind of the opposite philosophy there. So yeah, this is a list of all the kind of ETFs that track each sector. Again, this is just a high level ETFs. There's so many more specific ones. So for example, within tech, you have the SMH ETF, which represents semiconductors. Let's see, within energy, you have TAN, which represents what's it called? Solar. Then you have plenty of other subsectors. So you have the Bitcoin ETFs, you have many more commodity ETFs, many more treasury ETFs, which, it's just impossible for me to list all those. Ivan said, would I buy and hold these ETFs? Yeah, if I was interested in an investment in any given one of these, I wouldn't have a problem with buying and holding them. Personally, though, in terms of trading options on these, I'm not so interested, just because generally speaking, liquidity can be a little bit subpar on some of these. But yeah, absolutely, I think these are reasonable candidates for trading. And also just remember that all of these are effectively just components of the S&P 500. Like every one of these 11 sectors are the most significant components of the S&P. So by trading these specific ETFs, all you're really doing is just trading components of the S&P. So if you're interested in being a bit more of a stock picker, but not really going too crazy, you could definitely, like when I say a stock picker, if you want to have a balance between, choosing a bucket of individual stocks, like the kind of Warren Buffett investing methodology, but don't want to just buy and hold, the S&P or the Qs. This is kind of a pretty good middle ground, right? You're still getting access to a collective of stocks. However, you could change the way you weight things. Like, for example, if the S&P is only 30% tech and you want to allocate, 50% to tech, you could do that by going into XLK. And if you want a little bit less exposure to the basic materials, you could do that, right, just by balancing your portfolio off these sectors. Now, definitely a little bit more work, but if it was something that you're interested in, there's not anything specific wrong with that. Hopefully that answers your question. Raphael, Q is a tech ETF or just tech heavier than SPY, for example? Yeah, so QQQ by definition is a tech ETF. Last I checked, they did hold a couple financial companies, but that was a really small component. For the most part, though, QQQ is essentially the 100 largest tech companies. So obviously Google, Microsoft, Amazon, NVIDIA, Netflix, Meta. Yeah, I think I covered most of them there. Apple. Those are the big seven. We can even just look what's in there really quick. There we go, QQQ companies by weight. So the top 10 holdings are about half of the ETF. Oh, I forgot Tesla was in here, which is essentially all the tech names that you would expect. Ooh, AVGO actually has made a big move higher in this. This is much more weighted. Oh, and also Costco's in here. Yeah, so there is definitely some interesting changes. Wow, this must have gotten rebalanced since the last time I checked it. A little bit more outside of tech. Communication services are, generally speaking, they're kind of part of tech, at least some of the names that are included in here. Let's see if it lists the specific ones in here. Yeah, so Google, Meta, Netflix are all wrapped up in communication services, which those are real big names in here. And then, wow, interesting to see a little bit more balancing than I remember the last time I checked. So yeah, definitely a bit more of these cyclical and defensive names. Oh, well, Amazon and Tesla and Home Depot are included in there. That makes sense. So here you can see some tech stocks are included in sectors that might not seem like tech companies. And it's interesting to see all these more defensive companies. I don't remember that being in here. AVGO going to be added to the S&P and kick Tesla out. I'm not so sure about kicking Tesla out for AVGO, Norbin, but yeah, getting out of the S&P if it isn't already. If it's in the Qs, yeah, it definitely makes sense. All right, so that's kind of a big list of the ETFs. Let's start talking through. Let's start talking through moving into analyzing some of these sectors. So, going to move to the charts here. Before I get too deep into this, any other questions or comments? We'll probably spend the rest of the lecture talking through just some methodologies and routines for actually performing the analysis on the sectors. So. You love this, Norman. All right. Well, that's good. Excuse me. While I wait for any questions, Norman, I don't know what happened here. VRT. You missed it, man. Back down at 50. You had it. How about this one? Oh, Rambus hasn't had too much luck recently. All right. If there's no questions or comments, we will just move right into looking at the ETFs. That's true, Norman. That's true. All right. So I'm going to put the S&P on the left here. We'll just do SPY. And on the right, we'll just take a look at one of the ETFs that we were looking at earlier. Why don't we just take a look at XLF? So first and foremost, in terms of a routine to kind of be analyzing these sectors, it's certainly important to keep tabs on what's going on with the sectors within the S&P. So if you're someone who maybe doesn't have too much time to dedicate to financial markets, at minimum, you should definitely be analyzing S&P, the Qs at minimum on a weekly basis. But if you have a bit more time, ideally, you're also taking a look at the sectors in addition to any individual names that you're interested in trading. And kind of the workflow for that, at least my specific workflow, generally starts with charting out the SPY. So taking note of any levels, any changes in trend, any unique volume patterns that are notable, any significant levels of resistance or support above or below current price. And that's really the big idea and just generally kind of my sentiment. So figuring out what I'm thinking based on how the chart looks, which, yeah, anyway. Generally, that's kind of the first step of the workflow is getting a good understanding of where the SPY's at. Then after that, it's pretty reasonable to start looking into the ETFs and figuring out any differences between the two. So for example, comparing the XLF chart as of late to the S&P chart, very clearly, these two charts are not looking like the same over the past 3 months, right? Here, for example, on the right, we have XLF breaking these highs, then quickly cracking right below after this breakout above the highs. And now it's holding below these prior highs and also below this kind of, well, maybe right at this little micro trend here, no, below it. So important thing to note here is that at this point, it's kind of obvious that XLF is starting to show or has been showing some relative weakness compared to the SPY. And what we'd be looking for is one of two things. Either it would be reasonable to look for maybe an opportunity to purchase a dip on the sector, considering it's been reasonably strong over this year so far. Also moving into a level of some support here, right around this $40 area. I guess, yeah, 40 up to 40.5 here. Certainly a reasonable level of support to be monitoring here, especially after a day like today on elevated volume when price went nowhere. Regardless, though, the type of kind of line of thinking that you should really be considering is answering a couple of questions. So number one, you want to answer how the sector is performing relative to the rest of the market. So in this case, in the short term, XLF is underperforming the rest of the market. So while the market is holding above these previous all-time highs, XLF also set all-time highs in the same amount of time. However, now it's holding below these prior all-time highs. So kind of an important distinction there. Also lost a pretty key level of support. So that's kind of the first step, is figuring out how is this specific sector performing compared to the rest of the market. Next step is doing kind of your standard technical analysis. So getting an idea of the key levels, understanding what the volume patterns are looking like. So right now, a little bit negative in terms of the volume patterns, not necessarily the most bullish volume patterns here. As price moves lower, it's getting validated by rising sell volume. So not necessarily something that you should be rushing into to buy the dip with your eyes closed and praying. However, still something to be monitoring as it comes into the support. And if it's a sector that doesn't really give you much interest and looks like it's underperforming the rest of the market or not really at a kind of important inflection point, which in this case, XLF would be kind of meeting all that criteria. Generally speaking, I would throw it to the side. So for example, for me in the following week, I probably wouldn't care much about financials. Maybe I'd be more interested if they came into this 40-55 area, so I could set an alert. And when price does come into here, I could be messaged on my phone or on my chart, so I could see that XLF is coming into an area of interest, which again, this is another one. If you guys don't learn anything from this lecture and take away one thing, I couldn't recommend more the use of alerts. It makes it really easy to monitor a bunch of different setups without having to actively watch every single one. All it takes is going through your weekly routine, either on weekends or whenever. You set those alerts at areas of interest. So for example, if I'm interested in potentially getting long here around the 40-50 area, I just set an alert when price is at or below a price reasonably close to that level, so 10 cents above. And then when I get the alert, I can start monitoring the chart more closely and determining if there's actually something actionable for me to do. So anyway, important thing to note there. So again, for this example on XLF, it's showing relative weakness compared to the rest of the market. It's not really at this key level of support yet and hasn't really formed any constructive reversal just yet. So for me personally, not something I'd be super interested in. Also just kind of below the moving averages in the short term. Lost the 50 SMA as well. So definitely at a point of maybe some potential vulnerability. It looks like the 9 EMA is about to cross below the 20 as well. So, excuse me, the 10 is going to cross below the 20. So for me personally, XLF, not one I'm super interested in. And that's really the kind of overall workflow is, again, figuring out what's going on with the higher level ETF, in this case, looking at the SPY, drilling down into the sector ETF, in this case, XLF, and then moving on from there. We could perform a similar line of analysis with something like TAN, which is solar. And solar for me actually has been looking incredibly interesting, some more interesting than it ever really has, at least over the past few months. So this is looking interesting for a kind of different reason. So if you remove all the indicators here and just take a look at the weekly for a second here, solar in general obviously is at a spot, in extreme relative weakness to the rest of the market, right? I mean, you compare the weekly charts of solar to the S&P, these don't even look close to the same. However, the solar sector is starting to get some really interesting spikes in buying, right? So this would be an example of some reasonably positive volume patterns, right? As price sits in this base, even on the sell week, right? High volume as price moves lower, but it was quickly reversed, and we're maintaining this level of support right around the 40 buck area. Additionally, as of last week, we broke out on some of the highest volume, well, the highest volume in 2024, and really one of 3 weeks on par with this volume over the past, I don't know, couple 100 weeks, probably, maybe that's 100 candles there. I can't really tell, 50-ish. Anyway, really high volume breakout last week. So it's just kind of showing a different perspective, or should I say, it's showing different behavior compared to the rest of the market. And after a breakout like this, with this amount of volume on the daily chart, it's definitely something to be paying attention to, right? It's something that's not really doing what the rest of the market is doing, and something to start looking into. And after this breakout here, important to note that, if you didn't catch it here, which I'm sure most people didn't catch it here, it's something to start monitoring after you get a breakout like this, right? Especially this high volume, it's not something to be ignored, and it should give you a reason to start looking at the solar sector as a whole, right? Really strong breakout on the sector as a whole. So if we started to look into some specific names, maybe like ENPH, which is actually sitting at a pretty interesting level, weekly point of control here, or maybe, I can't think of a bunch of solar names right now. I think CRON, maybe? No, I'm wrong. Maybe I'm not wrong. Anyway, the big idea is that when you're looking into some of these ETFs and you notice some of these kind of unusual or high probability continuation patterns, it gives you a really good excuse to start looking into individual names. Oh yeah, FSLR. Thank you, Empanada. God, I couldn't think of one more solar name. FSLR. I can't type it in either. Yeah, I mean, clearly this is the one with the most relative strength, right? I mean, this is borderline ridiculous, right? So this is exactly something. This is actually a really good example. I kind of forgot about FSLR. I looked at this chart a couple of weeks ago, or last week, I should say. So really interesting kind of comparison here. You have TAN sitting near the all-time lows, well, 52-week lows, or I guess 152-week lows, breaking out of this base on high volume. Then you have FSLR breaking previous all-time highs with a, what is this, 30% gain, 40% gain in a single week on the highest volume in the last 3 years. It's probably going to be something to pay attention to. And while it's probably not necessarily the greatest idea to get long right here, it's certainly something to monitor, right? Clearly, people are trying to get into FSLR, which they must have gotten news. I didn't actually see what triggered this run. But this is a really great example of something to be watching on a pullback, right? FSLR is clearly the strongest name in the sector. I mean, there's not much that's going to be any stronger than this. And generally speaking, on a strong breakout like this, the first pullback to the EMAs is one that gets bought. I mean, that's just generally a good place in the short term for buyers, and typically ends up being a place where we see a short-term bounce. So in this case, for FSLR, we have kind of the backing of the overall sector moving higher. We have FSLR, which is a name with a significant amount of relative strength. I mean, unprecedented, right? I mean, there's no denying that these two charts, I mean, look at this for yourself, right? Nobody could tell me that these two charts look similar, but they're in the exact same sector, right? On the right represents the sector as a whole. On the left represents an individual name within the sector, right? And the way we can understand that is by looking at the solar ETF, connecting it back to the theme of this lecture, right? So anyway, big idea is looking for setups such as this, right? And while right now isn't necessarily the best place to get long, and probably isn't the best place to get long for a long-term trade, any pullback back into the 230s prior all-time highs is likely one that should be bought for a longer-term trade. Any pullback into the EMAs is likely one that should be bought for a shorter-term trade, a day trade, or short swing. So anyway, just a couple things to be mindful of. Yeah, this is a really good example. Thanks for telling me about FSLR. I can't believe I forgot about that one. And run is an example of one that maybe doesn't have as constructive of a setup as the rest of the market, right? If we take, as the rest of the sector. So for example, excuse me. while the sector has been getting some significant volume, especially as soon as last week, it kind of seems like Sunrun's been a little bit left out of this move in the short term. So I might be waiting for a breakout of this longer term trend here, or maybe even you can look at it that way. A couple different ways. Anyway, I'd probably be a little bit more cautious on Sunrun just because over the last few weeks, we haven't really gotten that accumulation volume that we have on the ETF as a whole. One thing notable is definitely historically high volume at these lows. One important point to note that is not necessarily within the scope of this lecture, but just something important to realize is that institutions are unable to hide when they are making significant transactions. And in the case of Run, it's very clear that institutions are making significantly large transactions at these lows. And when you see this high amount of volume and price isn't moving lower, there's only really one thing that can be going on, and that's people are buying, right? There's big sellers that are selling into bigger buyers, right? We have this huge amount of volume at the lows, which is highlighted by this yellow script that I like. And it's very clear that there's a large amount of buyers present at these lows. So a couple of different ways to look at it. While in the short term, Run doesn't have the same significant volume that the rest of the sector did, it almost has even more accumulation volume at these lows, making this almost slightly more attractive for a longer term trade with maybe a stop under 10, which would be about a 30% loss, which that's reasonably significant. However, if you have your first target for maybe a 30% trim at the 17, 18 spot, and then your next target at the 20 spot, makes it a little bit more reasonable. Or you could be a bit more patient, maybe wait for a move lower, maybe back into the 12s or the 10s, and hope it comes back for you. But anyway, the solar sector is a really nice example, at least of kind of that relative strength in the short term. And also a theme that probably should be continued to be watched. And even the legal weed theme as well is one that's also caught some steam as of late, which again, this is just kind of a subsector here, not anything specific. And this one just reverse split, it looks like. Well, anyway, I guess it hasn't had as much steam as I thought recently, at least the sector as a whole. But some individual names definitely have been hot. CGC, reasonably hot over the past few weeks. TLRY, I think, as well. I don't remember ACB. Yeah, ACB as well. So pretty big move off the low. So anyway, important note that the market generally moves in themes, right? There's different news events or different things that happen in the world that can have big impacts on sectors as a whole. And just to connect it back to the theme of this lecture, these ETFs help us monitor how the market is actually reacting and transacting within these specific sectors. So they're really, really crucial for us to monitor, especially when we get a catalyst as significant as this whole AI move that's been kind of taking over the past year, right? Again, as I mentioned, a rising tide lifts all boats. And for the example of AI, right, it's, I guess there's probably, I'm sure there's an ETF for AI at this point. But anyway, news such as that lifts sectors all throughout the technology sector. So anyway, I don't want to get on too much of a tangent here, but that's kind of the big idea of the workflow and comparison of analyzing sectors. And I know I gave just a solar example, which I didn't talk about that sector at a high level, but definitely still, what's it called? Definitely still important, and the workflow still applies, right? So although we looked at the solar sector, which is arguably pretty small compared to most other names, still the workflow 100% applies. So that said, we got a couple minutes left, 9 minutes left in the class ish. So I want to kind of take a quick pause and see if you guys have any questions, comments that I could clear up. All right, Norman, we're going to look at your stocks at the end if we have time. Your stock could come last because nobody else wants to see that except me and you. And you can always just DM me that list so we can look at together. Current shortage of copper would take copper at a new level. What would be a better idea to invest? Copper ETF or copper mining ETF? Oh, that's a very interesting question. So I can't necessarily speak on the copper kind of comparison because I'm actually a little bit less familiar with copper versus copper miners. But I can speak to a reasonably similar analog, which is gold versus gold miners. And as of really, I think the past couple of years, gold miners have pretty significantly underperformed the gold asset as a whole. So if we compare GLD to GDX, oh wow, actually I'm a little bit mistaken. definitely some significant moves out of the miners recently. But again, over the past couple of years, the miners have significantly underperformed the asset as a whole. So if we take, the 3-year return of the miners from the open of the last 3-year period, it's actually down 11%. Where if we take the return of the equity or commodity itself, why is it not showing me? Gold itself is up about 20% in the last 3 years. And even if we zoom out a bit more to the past 10 years, do that. There's definitely a very clear difference between these two charts. And I guess we're not seeing, yeah. So I think we're seeing the whole picture here. So let's just compare 10-year return of the miners is approximately 56%. 10-year return of gold is approximately 80%. And kind of the reasoning behind that is generally because the profitability of miners, and I guess one big factor is that gold miners have expenses, right? They have bills to pay. They have global factors that can impact them. They have employees that they need to pay. They're a business, right? Whereas the commodity itself, at least in gold, isn't at risk to any of that, right? All gold is kind of moved by is supply and demand, right? That's it. And obviously supply and demand can be influenced by a number of things, news, world events, whatever it might be. So I would say, generally speaking, at least from my experience, I've seen the commodity ETF itself perform better than the miners. Now, that said, that's really mostly rooted in gold and maybe a little bit of silver that I've looked into. But I haven't done that much research into copper, so I can't really speak on that specific commodity as directly. But it sounds like COPX, copper ETF, is running well. Honestly, a little bit less in the loop, to be completely honest with you. Thank you, Tillia. Honestly, Tillia would be a good person to ask about copper. He's definitely more, I'll call it, in the weeds with that sort of thing. So, he would be a better person to ask that question to be completely frank and honest with you. I'm a little bit more well-versed in kind of the gold and silver commodity comparison. But hopefully that answers your question. And I know that's the second time you posted it, so sorry I missed it the first time. And thanks for resending that. But yeah, hopefully that answers your question at least a little bit, gives you kind of my perspective on the gold side of things. But yeah, I can't say for sure if that applies to copper. All right, any other questions? That was a really good question. Questions, comments, concerns. How's everybody feeling about this? Are you guys all feeling like this is something that you could incorporate into your analysis? Hopefully feeling pretty reasonable. At the end of the day, all charts are a reflection of price over time. They're not too crazy. They're not too scary, and definitely can provide us a lot of value. And again, tying this all together, ETFs, great way to understand what sectors are doing in the market. Great way to understand how sectors as a whole react to different pieces of news, different world events. But you can't really. I'd be doing you a disservice to talk about ETFs without talking about sectors. So hopefully the conversation about sectors wasn't too far away from what you were expecting from the ETFs lecture, because I know a lot of you were asking about the ETFs in specific. Any other questions, comments, concerns? If not, you guys know where to find me. You guys have access to my DM, so you can feel free to send any questions, concerns, anything over at any time. I think it'd be fun for me to start setting up some one-on-one calls in mornings again. I did that a couple months ago, and I think I got through with like 10 one-on-ones or something like that. And I feel like that'd be something fun to do again. So let me know if you guys would be interested in something like that. It'd be completely free, included in your subscription, no extra costs or anything like that. It's just for fun. I like talking to you all, and I love doing the lectures, and that would just be, I just enjoy doing it. So anyway, if you guys are interested, let me know. Cool. Yeah, and just as a note, usually I do the one-on-ones in the morning. I'm not at the computer. I'm just kind of driving. So the one-on-one would be whatever you want it to be about. So if you want to talk about, if you want to talk about your life, I guess you could. But really, the purpose would be talk about any trading relating topics. It wouldn't be to get specific individualized investment advice. I'm unfortunately not qualified to provide any of that. However, in terms of talking about methods for research and analysis and analyzing charts and anything like that, would be happy to discuss those sorts of things. So seems like a couple of you are interested. I could try and set something like that up in maybe July or June. Yeah, you can message me if you're interested. The last time I did it, I set up like a little sign up board. I don't remember what application I used. Somebody gave me a recommendation for a really good one, and it worked out nicely. But also some people bailed, and I don't know if it was because like the application itself was complicated or something like that, or what. So maybe I'll need to try and rethink that a bit. Husky, you earned it. Husky's in these lectures every week, so Husky gets whatever they want. You're in here every week. I see that, so I know you guys are grinding, and all you guys are doing a great job. I think I'll say one last thing to close this lecture out. Everybody who's here tonight is definitely doing the right thing. Education and continued education is definitely the most important thing, and not only trading, but I think just life in general. You can never be too comfortable. There's always something more to learn. So if you think you have it all mastered, you're probably wrong. So that's the closing message for me. With that, I'm going to look into Norvin's stocks because you guys didn't have any more questions. If you do have more questions, feel free to put them in the chat. I'll stick around for like 5 minutes and look at the things that Norvin's putting in chat. NRG. Energy? What is this? NRG. Oops, I don't want to go in here. NRG. What is it? It sells electricity. Okay, so here's a utility and a cloud-based home platform. Huh. This is kind of interesting. So they sell energy and also have a cloud-based home platform. I mean, it's definitely on some kind of parabolic advance right now, but I mean, if I was trading it, let's see. Oh, what is this, dividend day or this is earnings day? Yeah, this high off of earnings seems like a very important level to watch. That's what I'd be watching. I'd probably be longer above this 83 area. Seems like a reasonable spot, but this chart's kind of a mess. NRG is a good company. I've never heard of this before. That's weird. But yeah, no, I'd probably be long above 83, targeting the swing highs right around 86. Probably how I trade it. But I won't trade it. Trox, Trox. What do you got here? God. Yeah, I got to look up what these are. Oh, silicone wafers. I think. Wait, TI isn't silicon. Wait, TI. What the hell is TI? What element is that? I should know that. Hang on, I gotta figure this out. Titanium. Oh my god. Titanium dioxide. Something. I mean, this one's probably pretty easy. I'd probably get long over that. I mean, really just 20, but most important is that 1970-ish. Oh yeah, this looks pretty interesting. Yeah, I'd get long over this right here, Norman. 1970, or I mean, on a move back to 18 would be a gift if it came long around there. I like this one. This one's nice. OPCH. Option Care Health. OPCH. How is this? Home and alternate site infusion. Anti-infective therapies. Dude, what? What's up with all these different stocks that you're in? This is pretty whack. I don't know how I feel about this one. Bad report, bad reaction to it. Sitting in a range for 2 years. I mean, really, you shouldn't really touch it unless it's at one of these extremes. Right now, it's in the middle of a range and it looks weak. I probably wouldn't have anything to do with it. Picking up a little bit of volume recently, but oh yeah, a little bit of an inside day. I mean, yeah, if you wanted something in the short term, you could long it through here, but that's just like a short term. It's not really something that I think would qualify as a long term entry. But it is breaking the short term trend. Volume patterns are still kind of bearish for this big red day, supported by a lot of volume, but it is breaking this trend. Probably get long through this area, 29-ish, 30-ish. I don't really like it though, but it's tradable, I guess. PWR. Oh, dude, I just can't even recognize any of these names. PWR. Oh, another utility. Dude, what's up with these utilities? I mean, this one's on a heater. I mean, if it gives you an entry around the 272 area, that'd be nice. Right back into the EMAs and these prior swing highs. That's really the only thing I'd care about for now. GNRC. Generac. Oh, why have I heard that? Is this generators? I might know something. GNRC. Various energy technology. Yeah, standby generators, ATS. Yeah, okay. Generac. What do they got going on? Ooh. Okay. This is kind of interesting, Norvin. This I could look into a little bit more. Let's see. So starting to form what we like to call a stage one base. It'd be a breakout over this 152 spot here. This is a nice kind of fake out below the prior lows, generally something that you want to see. We got a good group of accumulation bars here, here. That's not really accumulation. Here, here. This one didn't set any new lows, so that's not bad. And this one didn't set new lows either, and we broke those highs. Yeah, this actually looks all right, Norman. I don't mind this. I don't mind this one at all. This would be one that'd be more interesting to me for long term, actually. I just don't know why it's lagging so hard. Huh. It's evaluation. Oh, well, they're not growing, so that doesn't help. And they're not really valued at a cheap. The evaluation's not really low at this point. I mean, what's probably going to need to change this is a real good earnings report, which, I mean, who knows? Maybe it comes in end of July, but they're not really growing. They're not doing that well. However, the chart looks okay. It looks tradable for sure. Let's see. Yeah, I mean, I'd probably get long through 152. The hard part is when you get long through there, your stops really got to be like either 110 or on a failed breakout. Like there's not really much in between. And if you keep the stop to 110, that's a 25% loss. That's pretty big. So yeah, either got to give yourself room to potentially add more there, or just either wait for. There's kind of two ways to play this. Probably would wait for a weekly close over 152, then you could stop on a weekly close back below. If you wanted a tighter stop, let's see what we could do. I mean, you could probably stop out below this 132 area, this earnings gap that we're about to fill. I actually kind of like this on Orban. I'd probably get long on this through 152-ish, or on a move, I don't know, back to the 140 area. Wouldn't be bad. This one's nice though. Oh god, SMCI. He's blown. They're coming in with the usual. Somebody else asked for something else, so let's look at CBRL real quick. I really like seeing all these new tickers out. Oh, Cracker Barrel. Wow. When's their report? Oh, they report earnings tomorrow. Tomorrow morning. I know you said shorts, but I mean their earnings is tomorrow, so anything's going to happen. So I don't even know how useful it is for me to say much about this, but a lot of volume here at these lows. Let's see what we're looking at in terms of longer term. Oh wow, below COVID lows now. Poor Cracker Barrel is having a tough go of it. I mean, on a bad report, this thing's going to 37, 60-ish pretty easily. One thing I'm curious about, how's T doing? No, it's not doing anything. All right. CEO said Q3 and Q4 will be bad. Oh, so if they already said that, that's good. CBRL. Yeah, I mean, if they already said that Q4 and Q5 are going to, or Q4 and Q5, they already said that Q3 and Q4 are going to be bad. I mean, any significant dip on earnings might be one that you could buy for like if they come out with guidance and they say, oh, that Q3 and Q4 are going to be bad, and there's a reaction to it, might not be a bad opportunity, but not something I'm super interested in myself, to be honest. SMCI, what is SMCI doing? Not much. What's the valuation looking like on this one now? Oh, still pretty expensive. I mean, kind of in line with NVIDIA though. SMCI, I don't know what really to do with this. Not really much going on right now for me here. Kind of looks like a failed breakout to me. Clearly, I haven't looked at this chart in a while. Yeah, I don't know. Doesn't look super interesting to me. You could, I mean, stay long if it holds this 837 area. Or like, yeah, I mean, it held this gap fill. That's the only thing it's got going for it. This gap is right, kind of the support I'd be looking out for. Below that, it's not really so interesting, but this you could structure trade off if you really want to. ACLS. All right, last one. ACLS. Oh, we've looked at this one before, Norman. What do they do? Semiconductor fab. Yeah, I mean, it doesn't look bad. Just reclaim these prior lows here. This was a key level before. I mean, it's kind of just sitting tight below that 115 area. Yeah, I kind of like it above 115. If it can get above 115, it looks all right. That's not bad. Kramer running though, so we got to watch out. It's got this real big trend to watch out for that we're above now though. Yeah, I don't mind it. Definitely really desperately needs volume, but yeah. What are those colored waves under your candles called? So this is called like an EMA ribbon. I shared this study in my tab last or two lectures ago, so I can post it for you in here. Find it. Yeah, so it's the EMA cloud study in here. Chen, if I get that done, it'll probably be posted in my tab. Well, definitely will be posted in there. I sent the link to that study there. It's the EMA cloud. It's essentially just a combination of two EMAs. So here it's a 10 and 20 EMA, and the cloud just reflects the trend. I just think it looks clean. All right. Well, that's going to do it for me this evening. If you guys have any other questions, comments, concerns, feel free to let me know. You guys know where to find me. Appreciate your time tonight, and I'll see you guys all in the next one. Adios, everybody. Thanks again so much. Really appreciate it.